Hey guys, how you doing? Let's take a look at this. I want to go over the answers to some of these that you did today. Now, you folks at home and you folks here, you have the answers to these in your blue books, correct? Okay. I want to make sure, and I said this last class period, but I want to say it again. Make sure that you use those only to check your answers after you've completed it, okay? This is a very easy situation where you can get a false sense of confidence by just looking through it and going, oh, that makes sense. But you have to do it, okay? You have to do these FIFOs and LIFOs and stuff, okay? So I want to make sure that you're not getting lazy and just looking through the answer, not doing it yourself, okay? Let's go through the answers on this, okay? I think we're going to go through the answers to SpongeBob, and we're going to go through the answers to BB's boating. I don't know that we're going to get to the answers on new technique today, okay? We might not, depending on what we do here in class. But let's go ahead and take a look at the answers. Now, I understand fully that you guys have the answers in your blue book, but let's go ahead and take a look at these anyway, okay? First of all, are these the answers that you got for your 4 blanks? Did you guys get those? Yeah. Okay. Now, let me say something real important here, and you guys need to get this. When we have a test, people say, do I need to do all this and sort of stuff? Well, on the test, if this were a test question, what I might do is have each one of these blanks worth 3 points. So this is a 12-point test question, okay? You get the points if you have the correct numbers in the blank, okay? Now, as long as you're not looking off somebody else's test, I don't care how you get that number. Some people have said, I figured out shortcuts to do this, and there are some shortcuts to doing this, okay? But you have to have that right number in your blank. Now, take a look back at it. So, for instance, if you have the number 117 in this blank right here on a test, you get your 3 points. If you have any other number, and there's a lot of other numbers, aren't there? You're not going to get it, okay? Here's what I'm not going to do, and I learned this from teaching my first semester years ago. Let's say you have 120 there. I'm not going to go through and look through all your data and try to figure out where you went astray. That's a nightmare as an instructor, okay? To try to give you partial credit. Does that make sense? I'm just not going to do that. I'm going to look to see if you have these numbers. If you have them, you get 12 points. For each one that you don't have, I cross it off and you miss 3. So on the test, you want to be very careful when you do it. And if you have time at the end of the test, you want to like cover up your answer and do it again. Understand? Okay. All right, here are the answers to SpongeBob Incorporated, those 4 numbers. Let's see how we got those, okay? Now, I'm going to show you real quick what it looks like when you handwrite it, but then I'm going to show you a little bit more, it'll be a little bit more clear because I'll show you the typed version, okay? And I pointed this out last time, but once again, I want to point out again. Make sure you leave some blank lines in between the dates, okay? If it's all scrunched up together, it's going to be real hard for you to interpret. It's going to be real easy to make a mistake. Okay? So did you guys leave some blank lines there? Okay. Let's take a look at the answers. Now, I'm going to mainly concentrate, like I said, the challenge here is seeing this detail. So you have these answers. So if you look in your blue books, everybody, you at home as well, and you can see what I'm looking at. We start off with beginning inventory of 5 at 8 for $40, right? Then we purchase 9 more at 9 over here. And now we have the 5 at 8 for 40, and we have the 9 at 9 for 81, for a total of 121. Then we purchase 6 more at 10.50. So now we have the 5 at 8 for 40, the 9 at 9 for 81, the 6 at 10.50 for 63. The total there is 184, correct? Now we make a sale. How many units do we sell? How many units do we sell? 12, correct? And the sales price is $29 each, correct? Does that $29 show up anywhere on this sheet? It doesn't. The main mistake that people make is they say 12 at 29. No, this is the cost of sales. So, since we are doing the FIFO method, first in, first out the door with the customer, so we first take that layer, which was the first layer in, and then we need 7 more and we dip into that layer, correct? So 5 of the 8s and then 7 of the 9s. So we only have one sale this month, so our cost of goods sold is 103. What do we have left? Well, we sold all 5 of those. Of those 9, we sold 7 of them. So now we have 2 of the 9s left for 18. And we have all 6 of the 1050s left, don't we? So our inventory balance is 81. Our cost of goods sold is 103. Any questions on that one? Any questions? Okay, let's take a look at LIFO. Okay. Now everything is the same. Everything is the same up to the day of sale, isn't it? Okay. But now when we make a sale, since we are using last in, first out, we look to see what we have right here. We sell 12. Well, the first thing we're going to dip into or say that we sell is 6 at 10.50 for 63. Then we need 6 more, so we dip into that layer, right? 6 of the $9 ones for 54. Cost of goods sold of 117. Inventory balance of, well, let's see. We sold all 6 of those 1050s over here, so we have none of those left. How many of those $9 items did we sell? 6 of them. So we have 3 of them left, right? And then we have all 5 of the $8 ones. Is that correct? So our ending inventory is 67. Our cost of goods sold is 117. Are you with me? Questions on that? Got to make sure you understand this. Okay? So you can see that the answers are thus these. I got a couple questions for you here. What financial statement is cost of goods sold on? You know this. Income statement, right? Correct? Cost of goods sold is sales minus cost of goods sold equals gross profit minus operating expenses equals net income, right? What financial statement is ending inventory on? Balance sheet, right? So, are you saying there, Krug, that depending on what method you use, it will affect the number that goes on the income statement and on the balance sheet? Yes, I am. Because whatever the cost of goods sold is going to affect what your net income is, isn't it? On the bottom line on your income statement, correct? You with me? So this is a very, very important decision. It's a very, very important decision. Okay? All right. You guys haven't asked me one of the main questions that someone gets asked about FIFO and LIFO and the way we're doing this. I'm going to see if anybody comes up with that question. Okay? Before we do that, let's take a look at BBs. All right. First of all, let's just look at what numbers go in the blank. Okay? Take a look at those numbers. Okay? All right. Did anybody here get those numbers, curiously? Raise your hand. Okay, some of you did. Okay, good. I'll give you a second to check those numbers. Once again, on a test, this could be a 20-point question. 2 points for each one of those that you got right. And it's either all right or all wrong. Now, kind of the tough deal about these problems is that if you make a silly mistake up on your April 1st stuff, it's going to flow throughout the whole problem, isn't it? Yep. And it's going to be sad, isn't it? You're going to miss every one of them for one mistake that you made. This is why you have to make sure you leave enough time on your test to look to at least look through your work, but better yet, if you can redo it and see if you get the exact same answers. Okay? Now, some of you will do this and some of you won't. Some people won't do it. They'll make a silly mistake and they'll miss all the points on this test question. But there's just no other way to do it as a grader. Okay? It's just too hard to look through all the dozens and dozens of students I have, every one of their little inventory sheet details. It's just too difficult. And usually it's too messy too. Okay? Let's see where these numbers came from. Okay? All right, let's look at BBs. This is for FIFO. I'm going to mainly concentrate on this right side because this flows over to that side. And of course you have these answers. But those numbers in yellow are what go in the blank. Okay? So take a look at those. Keep those up on the screen, please. Any questions on those? Any questions? This is BB's Boating. BB's Boating FIFO. Yeah, this is the inventory, and the things highlighted in yellow go into blanks. Okay. So some of you guys got this. Is that correct? Yes. Okay. Some people pick this up real quick. Other people need to practice it a few more times. Okay. Okay. Let's take a look at the LIFO answer for BB's Boating. Okay. I'm going to zoom in a little bit. Okay. Take a look at those. Is that what you guys got? Any questions on that? Any questions? Okay. We're not going to go over new technique right now. We're going to talk a little bit. Okay. So we either assume the two methods we have learned are the FIFO and the LIFO, right? The FIFO is the first items we are the ones assumed that are sold as far as the cost of them. First in, first out, last in is still here in ending inventory. LIFO is the last in is the first out the door. The first in is still here. Did you have a question, Erica?
Can you just move it down and look at the bottom part?
Yeah. Yeah. Go ahead and take a look at that. Whoops.
Isn't that just the units?
Okay.
That's a
take a look
cost.
at that. Okay, now the question that you guys haven't asked that I thought you were going to ask, and usually every class does this, is why would anybody choose the LIFO method? Has anybody thought this? Why would anybody ever choose the LIFO method? Okay? And what they're kind of insinuating is, do products really move in the LIFO manner? The last ones that come in are the first ones that are sold.
In the grocery business, you would want to use FIFO because you have goods that are coming. You don't want those goods to get old.
Okay. It's a great, say that again. Say that again louder.
In the grocery business, you'd use the FIFO because when your goods are coming in, you have to get them out by a certain day so that they don't go bad.
Okay. That's a great question. Great question. All right. Now concentrate here. What he's saying is in the grocery business, I mean, think about it. First in, first out, last in, still here. And that seems to make sense for the grocery business, right? Because the older goods move on and the latest ones are still here, correct? Think about LIFO. LIFO, last in is the first out. The first in is still here in ending inventory. That means if products in a grocery store moved in a LIFO manner, you could go to Price Chopper and the apples and the watermelons and the hamburger meat would be the first in, still here, from years ago when they opened that store. You see what I'm saying? That doesn't make sense, does it? Okay. This is why it's key that you understand this. We have to choose a method for the way we're going to account for our inventory. That method is very important. It affects ending inventory, which is on the total assets on the balance sheet, and it affects cost of goods sold, which is important in deriving net income, which is on the income statement. Correct? So it affects the balance sheet and it affects the income statement. But listen to me what I'm about to say, it's very important. But the method you choose, the products itself, they do not have to actually move in that manner in real life. Does this make sense? So yes, you are right. In a grocery store, for the most part, things move in a FIFO manner. I'll give you one example. I'm not a very good artist, so you're going to have to bear with me. All right. Let's draw, let me see here. Let's draw a milk container.
You're saying physically they're moving in the FIFO, but money-wise it's not.
I'll answer that here specifically in a second. Okay, let's say that this is a milk refrigerator, okay? And the person who is shopping, there's their cart out here, and they're going to buy some milk, right? And there is milk sitting on these freezer shelves, and they're usually sloped down, right? You with me? So Mr. Milk Guy comes and puts more milk in. Where does he put it in? He puts it in the back, okay? Now, if customers take the one that's in front, then this milk is moving in a first in, first out, last in, still here manner. Is that correct? And have you ever looked at the milk when you look at a container? Or when you buy some milk? The ones in back are newer, are they not? Does anybody reach back and take one of those newer ones? Yeah, we do too. Now here's the deal. Let's say the grocery store used FIFO to account for all their inventory. And let's say that, Zach, you went and you took one of the ones in the back because you wanted just a little fresher milk. No one is going to run out of the office in a panic and say, sir, you can't do that. We account for inventory in the FIFO manner. You're totally screwing us up. In answer to your question, Brian, you choose a method in the way that you assume that your inventory is moving. It may or may not move that way in reality. Okay? Does this make sense? Most things move in somewhat of a FIFO manner. Okay? Most things move in a FIFO manner. However, a grocery store could choose a LIFO method if they wanted to. The assumption that they make, or the one that they presume is going to occur in their records, does not have to mirror reality. Does that make sense? Okay, most products move in a FIFO manner. Here's a question I like to ask. Can you think of an example in real life where the product actually moves, in reality, in a LIFO manner? Now, before you answer, what does that mean? Last in, first out. That means the latest stuff that they have is the first one that is actually sold, and the first stuff that they have is actually still there. Now, we said that the method you choose does not have to mirror reality. But I'm asking you, just for fun, can you think of a product that actually does move in that manner?
New clothing, new apparel. When stuff like that comes out, people are going to want the newer stuff. And then the new stuff runs out, and they're like, oh, okay, well, I guess I'll get this. I'll settle for this.
Okay, I like where you're going. It's not a perfect example. Because if let's say Kohl's, you guys know where Kohl's is, right? You guys know Kohl's. That would mean if you went to Kohl's, that the clothes that they literally have on the racks for you for sale here on October 18th or 19th, whatever today is literally the same clothing that they had when they opened the store. That's pretty doubtful, isn't it? It's hard to think of an example. I have a good one, actually. A student gave this one to me.
This thing kind of like cars. Like, when they come in, they can charge like a higher price, like newer cars, and like they wouldn't be as worried about selling like say you have an 09 model,
Yeah.
and they could sell that for more than the 08 model, so then they would try to sell that one for more.
Okay.
than the 08.
Again, I like the way you're thinking. It's probably more of a convoluted manner in a sense that some people are going to buy the brand new cars, some people are going to buy the old cars. Okay? It's pretty hard to think of an example. Let me give you two of them. One's an okay one, and then one's a really good one. Okay? I like the way you guys are thinking, though. I can tell you're thinking. Let's say that you went to a sporting goods store and they had a bin full of basketballs. So they buy some basketballs. It's all the same basketball, and they throw them in the bin. Okay? Then some time goes by. They buy some more basketballs and throw them in the bin. Then some time goes by, and they might buy some more basketballs and throw them in the bin. Okay? Well, when somebody comes to buy a basketball, if they take that top one, then that is moving in a last in, first out the door with the customer manner. The first that we're in are still here and in the inventory. Does that make sense? Yeah. But even then, that's not the best example. Here's a really good example. Have you ever driven by, like out on 435, and seen those big sand pits? Those big things of sand? Think about it. Oh, over there in the industrial area. And what they'll have is they'll have a big pile of sand, okay? Big pile of sand. Like, just to give you an idea how big this is, this would be a human being, okay? So then they have some more sand. They bring in some more sand from the river, and they stack it right on top of there, don't they? Then they get some more sand, and they stack it right on top there. Finally, it's getting to be a big old thing of sand, right? Well, when Mr. Dump Truck comes to get some sand, what sand do they get? Right there. They don't burrow into that earliest sand, do they? Last in, first out the door with the customer. First in, still here. As a matter of fact, if they never moved piles, that inner core of sand, first in, still here, it could be there a long, long, long time, could it not? Okay. So it's kind of interesting to think of things that move in that manner in reality, but remember once again, we have to choose a method. It's very important in determining both our balance sheet and our income statement. But the way the items move in reality does not have to reflect exactly, or let me say it again, the method we choose in our bookkeeping or in our accounting does not need to mirror in reality the way things actually technically move. Okay? Does this make sense? But we have to make an assumption here. Cool? Okay. I'm going to shift gears a little bit. We're not going to go over new technique today. What I want to do is this. With the camera, pan the room just for 10 seconds, okay? Show the group of students you've done it before. All right? Now, okay, now you can come back. What I did is before class, I asked everybody their age, okay? I asked everybody what their age was. And what I did is I wrote it down on a little green piece of paper here. Okay, can you see that? Okay. Now, if I wanted to, I didn't write down my own. Okay, you'll notice there's one missing. Oops, there's one more we forgot. Okay. So there's my age is missing, okay? You probably noticed that. Now, if I wanted to figure out what is the average age of a student in this classroom, how would I do this? I would add them all up and divide by 11, okay? Actually, let's make it a little easier. We have 2 18s. We had a bunch of 19s. You're right. Thank you. We had 3 18s. Okay. That's what we had. Let me go ahead and figure out the average of that, and somebody can check me on that. Actually, I don't know if I have my calculator, so I might have to rely on you. Oh, I got one in my pocket. Okay. Okay, first of all, when you added all these numbers together, what did you get? 215. I got the same thing. When I added all of these up, I got 215. Okay? Now, what do we divide by then? 11, because there's 11 of them. Okay? Well, 215 divided by 11 equals, I get 19.54.54.5. Is that what you got? Now we can round. Let's go ahead and round to 19.55. Okay? Okay. Now this is important. Is this a reasonable answer? When you figure out the average of the people in this classroom, is this 19.55 a reasonable answer? Yes. What if I would have got an answer looking at this? What if I would have miscalculated and I would have got an answer of 56.90? Does that make any sense that the average age of a student in here is 56.9 years old? Not a bit. What if I would have got the average is 0.25 or 3.69? Does it make any sense that the average age of a student in here is a little over 3 years old? No. Okay? Make sure whenever you figure out the average, just looking at the screen here, I can see we had a lot of 19s, didn't we? So chances are, and we had 3 18s. So chances are the average age is going to be somewhat very near those numbers. Now we had a 26 and we had a 21 that kind of bring it up a little bit, right? Make sense? Okay, why do I say all this? Well, because the method I want to do now is called the weighted average method. Let's go back to our example. Okay? Now we had, going back, we have our warehouse here, right? And actually the first layer we had was the $10 ones, right? Let's do this the right way. We purchased 3 $10 items, correct? And then we purchased some $12 items. Same item, the cost just went up, correct? I think there was one more $12 one, wasn't there? Remember this? And then we purchased a couple more items, and what was the price there? 13. Okay? Now we are going to make a sale, and we are going to learn a new method of accounting. We learned the FIFO method, we learned the LIFO method. What we're going to do now is learn the weighted average method. So let's say that we sold 4 items. What would we do? We would figure out the average, weighted average cost of these items here in the warehouse, just like you did the ages of the people in this classroom. What would that be? Well, let's see. That layer is 26. That layer is 60. That layer is 30. So that equals, what does that equal? $116 total for all those. And then how many are in there? No, I think there's 10. So the average is 11.60. Now when you do this, always take it to 2 decimal places. Don't round to 12. If this were 11.63, don't round to 11.6. Always take it to 2 decimal places. But then when you make a sale on here, what you're going to presume is that you sold 4 at a cost of $11.60 each. Does this make sense? Now, you only need to figure out this average whenever you make a sale. But then what you do is you add up the total value of your inventory, which is $116 in this case, divided by the number of items in inventory. And that gives you your average. And you should ask yourself, is that a reasonable answer? And I believe it is. Now, once you figure out that average, in a way, what you're saying is, we have 10 items that are $11.60 each. You with me? And when you sell those 4 items, then what you're going to basically say is we have 6 of those at $11.60 each. Those original layers of 10 and 12 and 13, they really, for our records, they no longer exist. Then as we buy some more, they will be added up. And if we have to figure out the sale, again, we will figure out the weighted average cost by taking the total value of all the inventory items divided by the number of items in inventory. Brian.
When you do the weighted average the second time, you just calculate it at all of those at 11.60, right? Versus
well, what
the
we would
original
do
price.
is, like, let's say we purchased, 3 more at $14. Well, then we would just add 14, 14, 14, 6 times 1160. That's your total value divided by 9. Yes, always use the weighted average. But the main thing is, once you figure out the weighted average, you don't ever look at it in that way again. You look at it in that way. Does this make sense? Now, what I want you to do now here in class is I want you to do ABC Incorporated. ABC Incorporated in your blue book. Huh? As a weighted average. It says to do it in the weighted average method. Okay? So in your blue book, everybody at home, let's do ABC really quickly, okay? Okay, you might not be quite done. If you're not, if you guys at home aren't quite done, just pause this and push play when you are finished. But we need to go over the answer because we're getting low on time here. Looking at the screen, here are the answers to those blanks. Okay, $830, $1,262, $757.20, $779.80. Okay, did anybody get those? You got those? Let's look real quick how we did that. Now again, I know you have the answers here, and it's probably easier to see on your copy. We start out, we have 10 of the 48s, right? We buy 7 more of 50, and they've gone up to $50. It's the same item, it's gone up to 50. So there's our first blank. Now we don't need to figure out our average cost here. We only need to do that when we make a sale. We purchase some more items. The price has gone up to 54. Thus, this is what our ending inventory is at that point, right? How many items do we have in it? 25. Because the next thing that happens is we make a sale of 15 items, correct? How do you figure the average? You take that $1,262 divided by 25. That gives you $50.48. Okay? Thus, we said we had 25. We sold 15 at $50.48. So we now have 10 at $50.48. Let me say that once again, guys. Concentrate. We had 25 total items. We figured out the average cost, and we said we sold 15 of those. 25 minus 15 equals 10. So now we presume that we have 10 at $50.48. And then the next thing we do is we buy 5 more. It's gone up to 55. And like I say, now we keep track of that 10 at $50.48. Those earlier layers are gone forever. And that's our final number. Are you with me? Make sense? Okay, I'm going to take about 2 more minutes here to tell you something. Okay, I know we're a little over. Bear with me. The last method, we've learned FIFO, we've learned LIFO, we have learned weighted average, and we have learned specific, or the one we're going to talk about right now is called specific identification method. That's a very easy method. The specific ID method, they just tell you, you sold 4 items and they were 4 of the $12 ones, 1 of the $10 ones, and 1 of the $13. In the specific ID method, they tell you exactly which ones were sold and the cost of them. They have to tell you exactly which ones were sold. So the cost of goods sold would be here, the ending inventory would be here. In the specific identification method, they tell you exactly which ones were sold, or sometimes they say exactly which ones are still left. What is your homework? This is very important that you catch this. I want you to do Quick Study 6.3. However, it's very important that you pay attention to what I'm telling you. There is Quick Study 6.3. And this is going to have you do all 4 methods: FIFO, LIFO, weighted average, and specific ID. Listen to me carefully. See that sentence that I've highlighted in yellow? See that? That sentence is used only for the specific ID method. When you use the FIFO, the LIFO, or the weighted average, I want you to act as if that sentence in yellow is not even there, or it's going to majorly confuse you. Literally, ignore that sentence in yellow for every method except the specific ID method. Does that make sense? So your homework, folks, is Quick Study 6.3, and I want you to finish up New Technique. Make sense? New Technique and Quick Study 6.3. We'll see you guys later.